Well, I think the market is beginning to lose a little bit of its steam. It had been doing fairly well, but then ran into some trouble. But then the Fed came in to the rescue of the stock market. But I believe that it might end up having to start to digest some of the earlier gains in the near. Well, the technology sector has done well because with people sheltering in place in their homes, the only way that they can really interact with their friends, their neighbors, as well as their clients is through technology. So we're actually seeing an increase in demand for technology because a lot of people believe that we are likely headed for a second round of the COVID-19. Well, I think heading into 2021, if you look to S&P Capital IQ consensus earnings estimates, the U.S. is expected to show a 30% gain in the S&P 500's earnings, but developed international should see a 50% gain, and emerging markets should also show a 30% advance in their earnings. So it looks as if overseas you have a greater chance of seeing a snap back in terms of earnings as compared with here in the U.S. Our expectation is we probably could see the value of the dollar ease a little bit over the next 4 quarters. I'm not saying by much, it would be by less than 5%, but still it would make these commodities more attractive, financially attractive to overseas companies, and also make international investments more attractive to U.S. investors. So the belief is that because basic materials, which have underperformed the market month to date as well as year to date, underperformed over the last couple of years, I think some investors are expecting to see a rotation back toward the mean and to see some sort of improvement in these beaten down groups. I think that there is the possibility of a second round of COVID-19. Certainly we saw a second and then a third round in the Spanish influenza of 100 years ago. But I don't think that the states and the government as a whole will react the second time around as it did the first time. We'll probably not see a national edict to close down on a state level. It could be state by state. So I feel that a lot of people have shelter in place exhaustion, and as a result would push back quite a bit if they were forced to do so once again. Even if we do have a second round, that we likely will see a recovery of the U.S. and global economy in the second half of this year and extending into 2021. So the belief is that that could be one of the reasons why commodities are starting to improve on a price basis versus its 50-day moving average. You basically have all but one sub-industry, one of the 15 sub-industries in the S&P trading above that 50-day moving average. And above the 200-day moving average, you have the sector itself, along with aluminum, copper, gold. So there are several areas within materials that are actually holding up quite. I think it's likely to be taking a breather over the next few weeks. My belief is that we got a stay of execution on June 6th when the Fed stepped in to say that they would be buying corporate bonds. That pretty much ended up curtailing whatever correction there might be. However, I do believe that we need to digest some recent gains in order to allow the market to work its way higher.